Yeah, it's one of the most overlooked numbers, perhaps, in the GDP report. Low prices are great, of course. We all like a bargain, but not so much that it hurts profits and payrolls, and that seems to be what's happening right now. You look at that GDP report, and on a quarterly basis, we saw the Fed's favorite price index, the PCE index, drop to just a 1.2% annual or quarterly rate of inflation. That's the weakest since 2008, in the middle of the financial crisis. Now, we get the latest monthly reading today at the bottom of the hour, but it's way below the Fed's 2% annual rate target. A lot of it's oil, not all of it, though. The core PCE also just up 1.2%. All other price indexes telling the same story, and it is beginning to affect companies. Not only can't they raise prices, but a lot of them are starting to have to cut prices, they say, in order to keep business. And here's something you don't want to see, and that is the drop we saw last month in hourly wages. You don't want to see wages go down, and in that GDP report, disposable income fell 4.4%. Again, some new numbers at 8:30, but these developments starting to worry the Fed. A number of them, Dudley, Rosengren, Bullard, have been talking about it. Don't expect a move on Wednesday, but it probably will make its way into the statement. And of course, they've been saying if this trend continues, we could see not tapering, but an increase in
Mike,
QE.
It's not just the Fed that's worried.
Yeah, the Bank of Japan this week, they set a 2% inflation target. Now they say they probably aren't going to meet it. And of course, the ECB has a real problem. The economy there really weakening, and that's pushing down inflation. Economists have forecast they're going to cut their benchmark rate on Thursday when they meet. Now, Germany's been the big problem there, the big roadblock, and that's going away. They got a couple more states left to report, but so far, German inflation for the last month, just 1.1%. They're seeing exactly the same thing we are. The door is open if Mario Draghi wants to walk through it.